Hey, how's it going, guys? It's VisualTrades. Today we close at 33.94, and post market we are at 34.05. So today we have a lot to talk about in terms of what we view as support moving forward, the macro bullish outlook that we are, still playing out, and also the market catalysts that affected where we stand right now. And also I wanted to show a little bit of a relation from the past. Just to start off. This is why I don't have any biases. I view the stock as it is. I join the movement. I see what I see, and I make a conviction based off of this. And based off of still what I'm seeing, we have some sort of falling knife setup. Nothing to really fret about. Overall, we are not bearish. Still, believe it or not, and I'm gonna get into that right now. But a lot of the points that I'm talking about is this is why you always respect your opponents, if that makes sense. Because without their conviction, you wouldn't have a conviction. Um, if that makes sense, there has to be some sort of polar opposites in order for this to manifest, whether it breaks down or squeezes up. Nothing that I'm really talking about today has anything to do with any antics inside of the AMC community. To be honest, I don't even check like that anymore. I just kind of wake up, I do the TA, post it, leave it at that. But yeah, let me get into the TA, guys. So I'm gonna go ahead and show this relation that I found over here. This is why I always say respect the fib levels. As you can see, even if we formed a reversal off of here at this $34 level, or even anything above $28, it will still be considered a higher low. Therefore, it's still a bullish trend if we could confirm some sort of reversal off of, to make a trend line. That's how you make a trend line, making higher lows. So for this outlook, I drew my fibs correctly. For this retracement, I had this pocket going at 35.41 and the 0.65 level at 33.47. Now, initially, I didn't think we were going to get here, but now that we're here, now I can go ahead and show this, where, during the last touch point that we had that I kind of pointed out over here, how we had 1, 2, 3. This encapsulating move represented here. This is over the span of about a week or so. You kind of have the same thing going on here. This is about maybe 2 weeks where you had multiple touches of wanting to break out. A couple of breakdowns because of market catalysts that were driving the price down. Simple shit that that's just outside of our control. Um, you know, but moving forward, we are still bullish, and I do consider this a sale. Personally, I'm about to load up even more. So long as there's another catalyst in the market that shows signs of a reversal. Other than that, I have to consider my options in terms of my position size. Now, in terms of this retracement on the January to June fractal, what you guys call it, we saw a retracement hitting the 0.65 level off of a reversal. And wouldn't it be funny if, I were to go back in time and see what kind of market catalysts were happening April 27th all the way to May 6th, which would kind of tie in this whole cyclical theory of anything that's happening in the market is timed and planned out accordingly. Let me go ahead and take a look. I just kind of want to see for myself. Market news, April 28th. Let's see. Kind of want to look at SPY, but I don't really have the time for that. Anyways, well, judging by this retracement to the 0.618, okay, with fib retracements, retracement means that within a long-term trend, there's a pullback. Depending on the amount of pullback is where you have these fib retracement levels. So usually if you see a pullback at the 0.382 and a continuation, that means the trend is usually super bullish. and you wouldn't have to worry about much more pullback if it were to eclipse over its top. 0.5, it's not as bullish, but it's still a good continuation with a significant amount of strength. And then the 0.618 usually is like, you, in most cases, it's the last line of defense. But for some reason, you know, AMC seems to be keen to retracing down to the 0.714 to the 0.786. That's nearing, considering in a factor of reversal. Now, on the macro sense, in the micro sense, we've been seeing those 0.786 retracements, but in the macro sense, you know, for the most part, this is like the first time we've tested this pocket since October 28th, and what could be playing out is a potential double bottom on the macro if we were to even go this low. Or you could just have a continuation from the market catalyst that caused a unsustainable sell-off, and maybe you'll have a lot of buying power going into tomorrow. However, I will check the Bollinger Bands in front of you guys right now. I haven't had a chance to look at them, along with a couple of indicators that should show us some sort of technical direction on where we could be headed. And I'll keep an eye on the news too, so that way I could tweet out some notifications. I'm not gonna lie, I was kind of disappointed when I saw that Moderna tweet basically saying that the vaccines weren't effective. Not that I'm taking sides on vaccines, but because I knew the market was gonna have a shitty day today. I was looking forward to holding my SVXY shares, but that didn't really go well pre-market. But cool. And I'm also hopeful that I could show you guys like my trades starting from November, the end of November. I started doing like this trader view log. That way you guys can see like how I day trade and stuff. That'd be pretty cool. So let's go ahead and go into this. All right, cool. So what you have here. Sorry. Damn. There's always something stuck in my throat, man. Hold on. Sorry, I'm texting somebody. 1 second. Very unprofessional, I know. I apologize. There we go. All right, so what you have here, damn, this laptop's distracting. What you have here is the 45-minute time frame of the neckline chart that I have drawn. Essentially, I thought we were going to hold this consolidation zone, but we ended up breaking down due to a variety of market catalysts. And right now, we're back down at the second neckline. Shout out somebody in the comments that pointed this out. From back when we started this trend from September 13th all the way down to October 19th. And now we're testing to see if we can hold support going down. In conjunction with the fib level being at this area, this will be a good time to reverse. So I'm going. What you call here is a descending expanding wedge, I believe it's called. Descending expanding wedge. And this is a bullish pattern. Usually it consists of lower highs and lower lows, but the swings expand as you go down, which gives which makes way for an automatic rally. And it's almost like the form of the end of distribution moving into accumulation. That's usually what it looks like. If you guys want an example of that, looks something like this. Well, nah, this was more of like a. This was a falling wedge. This is a falling wedge. I'm trying to look for an example where it makes the most sense. Oh. Wait, is this good? Nah, because the low would have to be a little bit lower. But all in all, call it what you want. It's still a bearish channel. Breaking up above this would potentially put us above this little neckline again, and have us attempting to retest upper fib levels once more. As you can see on the hourly. Remember how I said back then when candles close outside of the Bollinger Bands, usually it's a good sign to load up. Well, kind of had an instance here where you're starting to see macro time frames closing outside of the Bollinger Bands, which is a clear cookie cutter signs of a reversal. See, you have a close outside of the 2 hour. You also have a close outside of the 3 hour as well. Now the only problem with this is the fact that you are starting to cut it close to supports where you would talk about falling hard, like to what's the word I'm looking for? Free fall. There you go. You would start talking about free fall if we were to break this 28 level, which is pretty bad. However, knowing the stock and its entire possibilities, I would assume based off of these hourly candles that we would see some sort of reversal if there is no more news left that is here to tarnish our reversal attempt. I would feel comfortable loading up here. The only problem is I don't know what the market conditions are looking like going into tomorrow. Hopefully there's some positive news. Never understood why people used to say we had an inverse correlation to SPY. We, as much as we want to believe those things, we're not immune to market conditions just because of our beta. That doesn't make any sense. You're gonna that has nothing to do with like the sediment. There you go. So, retail continuing to hold will be the wisest decision for the fundamentals of the squeeze to happen. The squeeze itself, based off of the data, isn't affected by the underlying stock price. But it would be nice to test some upper resistances to put pressure on the short positions. But it does not change the fundamentals of the squeeze play, if that makes sense. Because, again, we're in the low 30s. But the one thing I wanted to mention about the Bollinger Bands is they basically become unreliable if you don't consider underlying market conditions, which is why it's like, yeah, okay, the candle closes outside of the Bollinger Bands, but now what? You know what I mean? Like, what, you're just gonna base your trade off of an indicator? Like, no, that's not a smart way to go about it. So you want to consider all your options here, especially with the fear that's going in the market. To me, I think it's an artificial sell-off. The contradiction going from, hey, we have the required instruments to supply this this new variant. Oh, cool. Oh, well, it might be not effective. You know what I mean? I think I don't know. It just seems too planned. But yeah. Now let me go ahead and take it to another account. I would like to apologize for this call out. It was kind of out of my control. I wasn't expecting the news to hit about what was going on. But hey, that's the nature of the market. We keep it pushing. You know what I mean? That's why I don't have all my eggs in one basket. I'm still making money on the side. I'm not really tripping off of a loss. Because what is lost, you can gain back if you are confident enough in your skills, your beliefs, and your ideologies, along with the research done behind whatever underlying stock that you have considered. Now, in terms of the fib levels moving forward, I would expect a reversal off of this 33.47 if we were to see further sell-off. And if we were to take drastic measures, then I would expect a reversal off of this 29.58. Essentially creating a double bottom on the macro, which essentially would be super bullish. And then you would start talking about, what's the name of it? Oh, wait. Isn't it just called a bull flag? Hold on. I'm so stupid. Hold on. Let me go ahead and see it. Let me just make sure I'm getting this right. No, wait, hold on. I think it's called a ascending triangle. Maybe it's this one. Hold on, let me check it. Let me check it. I'm trying to get it right for you guys. See, look at me being humble and looking stuff. Now double bottom. Okay, here we go. Now double bottom would be bullish, right? So if we were to bounce off of this 29.58 and show continuation above some of these fib levels, and that would be bullish moving forward in the macro sense. However, continued touches of support would create a descending triangle pattern, which is very bearish. It's basically wanting to break out to the downside. Essentially, this symmetrical triangle is pretty much done. Like the bears won that battle. So now we would be talking about forming some other pattern where you would have. I think, God damn it. See, here we go. I'm not good with these patterns, man, but I've seen them before. Here we go. Here we go. Here we go. Here we go. Okay. Okay. All right, I'm just making sure I had that right. Yep. So descending triangle. Same levels of support hit on the bottom, but then lower highs being made will make this a bearish scenario in terms of the underlying stock price. Nothing to be afraid of really right now. No real market news has really hit the fan yet to where anything should be considered. I don't think there's any cases in the U.S. I think most of it is maintained right now. So all in all, a lot of this feels like just a bunch of FUD, to be honest with me. Now, if there was some concrete data and evidence to support these claims, you know, I would be more concerned, but I'll leave you off with this. You know the saying, like, buy the rumor, sell the news? Well, you can say the opposite for bearish scenarios, where you sell the rumor, like, you know, of all this FUD that's happening with the COVID plays. And then you buy the news of some sort of confirmation that everything is under control. Because for some reason people look up to the government for help, even though historically they've shown us they don't care about us and they just want to make a buck off of us. But yeah, you know, there's not really much else I need to say other than if you need to look out for your own finances, do what you need to do. It's none of my business, you know what I mean? Like, I'm just here showing some sort of TA. That's pretty much it. So hope you guys had a good day. Don't lose sleep over this. Me personally, I'm done playing options on this up until I see a technical breakout. And yeah, that's pretty much it. So talk to you guys later.